Format today is we've got 3 panels. We've got 10 speakers. We've got a panel of 4, panel of 2, and a panel of 4. So they've been split up. So we've got the expert view at the end. We start with 4 businesses as well. And then we've got 2 speakers in the middle, including Carl Wong, who's going to talk about his experiences with Living Lens, which obviously made the news at the start of this year. I'm always mindful of time. So if it's okay with the powers that be, which is mainly Helen, who is the lady behind the scenes, pulling all the strings together with Frankie, I will kick off. My name's Chris Maguire. I'm hosting today's event, the Tech Investment Outlook for Liverpool City Region in 2021. This is a prelude to the publication of the second LCR Tech Climbers List 2021. I'm the executive editor of Business Cloud, and we published the list in 2019. We're publishing the next list in January 2021. And what we're going to be doing, we're inviting people to nominate. So the closing date for nominations is the 14th of December. The launch event for the Tech Climbers List 2021 is the 28th of January 2021. So get that in your diary as well. And we're going to be revealing the list of about, we don't know how many exactly, but we've had well over 50 nominations so far, and there's lots of others to come as well. The format for today, we're going to start with 4 tech businesses. What I would ask to make sure your microphones are switched off if they're not already, unless of course you are one of the speakers. So I'd like to introduce the first panel, which is entitled Tech Businesses, which is made up of Daniel Riley, Director of Ruler Analytics, Raina Heroin, the co-founder of Supply Well. I hope I pronounced your name correctly, Raina. Matt Latham, co-founder of Ticker, and Clemens Wagarin, the CEO of VTime. Can you hear me okay to the first panel?
Yes, thanks, Chris.
Daniel, you're the first speaker, so that's all we need to know. Daniel, you're the director of Ruler Analytics. You founded Ruler Analytics in 2012. For those people who don't know, just tell us what you do.
Yeah, so Ruler Analytics is a software as a service business, and it is a marketing attribution tool. So we sell our business to clients and customers within digital marketing agencies and digital marketing departments, and it enables them to measure the effectiveness of what they're doing in a way that Google cannot alone.
Well, as somebody who launched a business 18 months ago, I know how tricky that first year can be. I was looking at your history at Ruler Analytics, and within the first year, you were turning over £380,000, and you had clients including Mercedes-Benz. How would you describe the health of Liverpool City Region's tech sector?
Yeah, well, obviously it's kind of anecdotal. I can only sort of speak for myself and some observations, but I'd say that the tech sector is healthy. There's the actual, the place that the businesses are founded, the places that the businesses work from. Obviously, if the infrastructure has developed significantly over the last 10 years since we've actually been in the city. A lot more investment opportunities. I think the Northwest Fund and the European Regional Development Fund, by way of a few different distributors, have done quite a good job there. We've been the beneficiary of, the recipient of some VC funding from the Northwest Fund that kind of gave birth to this Ruler Analytics business. I think the environment for me seems healthy, and we export, so we feel as though the Liverpool brand itself translates and exports pretty well. It's a world famous city, so we get recognition globally, and there's that familiarity with the city and kind of the culture from sort of popular culture and history. So it feels as though the environment's a good place for us to operate, and a cost-effective place for us to operate as well, as opposed to our cost of producing our product here is probably slightly more efficient than it may be elsewhere.
Now, how big is the company now?
Yeah, the company is the company's had a recent valuation of in excess of £5 million. We have a growing annual recurring revenue. The company has 16 heads, so that's 16 individuals that are employed in the slightly further afield in the Liverpool City region, but certainly within the Northwest. So 16 heads and a growing annual recurring revenue.
We're going to talk about investment. Obviously, that's the name of the game in terms of today's event. And 2015, exactly 5 years ago in December, you raised £450,000 for a 20% stake from AXM Venture. How difficult or easy did you find it to raise investment?
First time I've done it, really. So perspective wise, I suppose looking back, I would say in hindsight, it was relatively easy, but at the time I probably perceived it as being more difficult. I think that if you have a good idea, and you can communicate the size of your addressable market, the opportunity for the capital that is injected into the business to compound and grow in the way that the funders want, I don't think that it should be too difficult to achieve investment. And certainly I think Liverpool is, I don't think there's any negatives, or I would say maybe there are better places with just the availability of this collision with the individuals that invest. But from our experience, it was sort of okay, not particularly easy, but not overly difficult.
There's a perception, Dan, I don't know if it's true or not, that you have to go outside of the region, you have to go down to London to raise investments. What was your experience of that?
Well, we did do a little bit of that, and we do receive sort of inquiries to this day, sort of from outside of the city. I suppose that's where the main financial centres of the world are. Obviously, they sit outside of the city. We actually, as I said earlier, I think that the European Regional Development Fund and the sort of central planners in Europe kind of did the free market people won't really like me, but they kind of did a pretty good job of distributing capital by way of VC and debt funding into areas like the Northwest with certain restrictions into the industries and stuff. We were the 430k that we raised in early 2016 was did come with some restrictions for the funders. They had to invest in a certain geography and then into a certain industry. So that I think that's good stuff, really, and hopefully as we leave the EU, that can be replaced with similar initiatives to help the businesses that are coming up behind us, or maybe future businesses that we start ourselves.
Final question, Dan, before I actually do the poll question after you. And you've been the best speaker we've had so far, Dan. Fantastic. What does 2021 look like for you, would you say?
2021, well, it's difficult. And obviously, there's a lot of uncertainty in the macro economy, I guess, around the obvious couple of issues. For us, hopefully, just more exporting, better product market fit, more understanding of where we're trying to grow and who our ideal customer is. We have a unique relationship with Google, in that we're the first marketing technology partner in Europe, Middle East, and Africa. So hopefully that can help us scale globally and continue to grow. So hopefully now the vaccine's out and Brexit's almost done, there can be slightly less uncertainty. We can operate in a slightly better environment.
That's what people talk about. They talk about certainty. Businesses need certainty. So the question I want to poll, actually, this is the first question for the audience, which is, are you confident about 2021? So Helen Cross is behind the scenes there at the Growth Platform. She's going to pose that question. So you'll see that question will appear in a second. It's, are you confident about 2021? I think you've got two options, yes and no. We sometimes give people the options of not sure, but why would you say not sure? I've done my vote. Actually, hosts and panelists can't vote because that might change things around. This is an audience vote. We were just testing to see whether or not Helen had accepted the bribes to allow us to vote, but she's not going to allow us to do that. So you've got two options, yes or no. Are you confident about 2021? Thanks very much, Daniel. Great start.
Thanks, Chris.
Raina, have I pronounced your name correctly? Raina Heverin, co-founder of SupplyWell.
You have, yeah. It's Raina Heverin.
Oh, okay. Very close. Okay, well, I should be calling you Raina only, which is very appropriate because it's raining here in Chorley. Now, SupplyWell is an edtech company. For those people who don't know, just tell us what you do.
Yeah, so SupplyWell, we're tech for good. We're on a mission to keep teachers and money in education. And what we do is we help schools to find great supply teachers via our marketplace. And what we do is we charge schools less, ensure that teachers earn more, and then we work with our partner schools to reduce preventable mental health absence.
Okay. If you want to ask any questions, anybody in the audience, just use the chat facility at the bottom of the screen, next to the share screen option. You've just received, Raina, £100,000 from Innovate UK. So, and we're talking about investment. How did that come about?
Yeah, I mean, we're over the moon, delighted to have been recognised and awarded that grant. We applied for the Sustainability Round 2 Fund because we just had a really great idea which would complement our wider Supply Well proposition, and that is working with teachers and schools around how they manage absence, which is obviously increasing in this crazy world we're living in.
Absolutely, yeah. And I say to everybody, you know, you got to December in 2020 of what has been so far the most difficult year, certainly of my life, all my 32 years. You know, so to get to this point is a reason for celebration, you know, and patting yourself on the back. But obviously 2021 is a new year. I mean, in terms of your experience of raising investment, I know you've had a hit and miss experience of trying to raise money locally in Liverpool. Just tell us about what's happened to you.
Yeah, I mean, you know, Liverpool is, as Dan said, Liverpool is a great place. We have a lot of access to wider support, but we found as a business that it's been tough getting in front of local investors, and there just aren't as many. You know, we are a Liverpool business. We're proud of that, and we'd love to be funded by local investors, but it's been tricky. What we have had is great other support. So we were lucky enough to get ERDF funding early on in conjunction with LJMU and the Activate programme, which was fantastic. And we've had access to fantastic mentors from the Liverpool City Region, but funding has been tricky. We are having some great conversations at the moment, so fingers and toes crossed, watch this space.
Okay, I heard an analogy that was given by Neil MacArthur from Talk a few years ago. And he said the thing with angel investors, in the Northwest is they hide in the long grass. Have you managed to find any angel investors in the long grass?
Yeah, I mean, again, it's been tough. There aren't as many, but we have spoken to a few. We met a couple early on who weren't actually quite the right fit for us. And then, of course, COVID hit, and we were just starting to have some discussions with a couple of other people just sort of March time. So that kind of went on pause as expected. But again, we have actually got some conversations going on at the moment. So there are, of course, there are angels around. There's just probably less access than other regions.
I mean, in terms of COVID, we got to 9:44 before we mentioned COVID for the first time, and we got to 9:42 before we mentioned over the moon. I didn't think you would be the one mentioning it, Raina. How has COVID affected your business, and how has it affected the tech sector generally, would you say?
I mean, look, obviously, yeah, COVID's been, you know, devastating in so many ways for so many people. What I can say for us is that, you know, we were fortunate enough to be in an industry that we knew would reopen. We knew that schools would, you know, open up again post-lockdown. So all we really could do was focus on when that would happen. And what COVID actually did allow us was a bit of breathing space. You know, we'd been juggling so many things and spinning so many plates like every other tech startup scale up. And so we took some time to really realign our processes, work on our go-to-market proposition, embed ourselves further with the schools we were working with because they were still kind of open, and we actually grew our teacher base. So we focused really hard on just getting ourselves into good shape or better shape for post kind of lockdown. I can't speak for other companies, but you know, our network of other kind of companies in the local region, I think it's the same for them. If you could adapt quickly, be agile and pivot where you needed to, I think, you know, it puts you in good shape for the future.
Got a question for you already, actually. Sonia Jonas has just asked, question for you, Raina. Do you target primary only, or do you target secondary schools as well?
Work with all schools, yeah. We work with primary, secondary, SEN, PRUs, the whole shebang. Yeah, we want to help as many schools as possible nationally, really. But we're focused on LCR and the Northwest initially.
I mean, one issue that you sometimes find, that I've sometimes found in Liverpool City Region, is it's got a very vibrant startup sector, but the challenge is trying to get them from startup to scale up. You've got three rules to get from startup to scale up. What are they?
I wouldn't say they were rules, but I mean, they're definitely things I'm sure all startups and scale-ups are thinking about the three main things for me and us at Supply Well are kind of access to funding. Obviously, you need the funds to help you support your growth. The second is talent. You know, we know that there are, you know, limited pools of great talent in Liverpool, or there have been, because, you know, a lot of people do leave the city and go to Manchester or London or overseas, wherever it is. But, you know, I think all organisations should be keeping an eye on what talent is out there, and, you know, actively kind of trying to hunt to find the best people. COVID, sorry to mention it again, it has meant that, you know, the talent pool is widened because people can work remotely, and we're seeing people moving back actually to the region that, you know, have kind of decided they've had enough of London and they want to kind of move back to their roots. So it's probably quite an exciting time, and there probably is a good time to find some great people.
It's a great point that you make there. I was talking to Liz Ashall-Payne at Orca, which is based at Daresbury, fantastic business. And she made the point as well that previously when they're looking to recruit, they were looking partly geographically, but what they've realised is that they can work remotely. You still want to maintain that culture when hopefully things go back to some type of new normal. I hate that phrase. But you can recruit much further afield now. And final question, Raina, for you in terms of what does 2021 look like? I mean, what's your thoughts both for your business, for the Liverpool City Region tech sector, and generally?
Yeah, I mean, gosh, it's got to be better than 2020, hasn't it? Let's hope with the positive news about vaccines and whatnot. But yeah, I mean, we're really excited about 2021. Oh, we've paused. Can you hear me?
I can hear you loud and clear.
Good. Yeah, we're really excited. We're super passionate about what we're trying to do as business, and we think there is an opportunity now, probably more than ever, for us to help schools and teachers. We've got some great new additions to our team, which we're excited about. We've got some great conversations going with investors. Our tech's being developed. You know, there's loads of positive stuff going on. I think, you know, Liverpool as a region, we're seeing so many great startups, so many great scale-ups, and I think that is growing and the ecosystem's growing. And so I think, you know, we're a great city, and we hopefully will just kind of see a big boom, and everyone will be, you know, happy and successful in 2021.
I'm always amazed, and I'm always incredibly humble when you hear such resilience from business as well. But it's the only way. It's the only way to be. Thanks very much for that, Raina. Excellent as always. Matt Latham, co-founder of Ticker. Matt, you set up Ticker at the start of. You know, I had this feeling when I was doing my research, it would be about 2015 or something, because it feels like you've been around for ages. But you only set Ticker up at the start of 2019. With your friend Tom McGillicuddy to target socially responsible investors. Less than 2 years later, I think you employ 20 people. You've got offices in Liverpool and London. You've got, I think, around 100,000 users on your app. What's the secret sauce that you've got there?
Thanks, Chris. Well, I certainly feel about 20 years older since we started, so it definitely feels longer than 2 years. Yeah, I think what we tried to do is we've tried to design our product with the user in mind. So we've started life as an investment app. We're from an investment management background, both Tom and I, and we designed the app from first principles about what does the next generation of investor want, and then we've gone beyond that now, and we offer a more wider range of impact related products. So we try and help our users have a positive impact in their everyday lives, either through their saving or their spending. And offer things like the ability to offset their carbon footprint from within the app as well. But I think, you know, the main thing that we've concentrated on is recruiting a great team. And I think the fact that we're a sort of mission-based business has allowed us to punch above our weight in that regard, in terms of we've attracted talent that probably otherwise wouldn't have joined an early stage startup, but they've left what would be otherwise relatively secure jobs to come and work for us on less pay with more to do. But, you know, the upshot of that is that, you know, we've assembled a fantastic team, albeit it's been a tough year, and we're actually ending the year with a larger team than we started it by some sort of miracle. But, you know, we've always managed to attract great people. I think that's really the core of it, really.
I was doing my research and I stumbled across Mail Online. I know a newspaper and a publication and a website that you read all the time. And there's an article about you, actually. It's really interesting, actually. It said that you've raised £3 million. It said that, and you say it's vital that investors really believe in the product. It's all right getting somebody's money, but if the investors don't believe in your product, it's a slippery slope. Tell us what you mean by that.
Well, look, we're a direct-to-consumer tech business, so this is long time horizon, build market share, accumulate losses, and you have to be in it for the long term. And our business is built around a few sort of macro trends. So we're looking at the wealth transfer between from the baby boomers to the millennial generation. We're looking at the move towards a world that has to tackle climate change, and we're looking at a world where the next generation are increasingly conscious of how they spend their money and the impact they're having when they spend their money. So this is sort of generational shift stuff. It's going to take a long time before the full potential of our business is realized, but we've got managed to attract investors that buy into that vision and are committing their capital for the long term, and they're not coming in trying to sort of nickel and dime us on how we spend the money. They trust in us, they trust in the team that we've assembled, and they're investing in us for the long term to create the vision, and know that we have to go through multiple rounds of funding to get there.
Well, one of the things that's nice actually about this Zoom call is I've done about 40 virtual conferences since March, and there's always somebody who's got a big bookcase in the background with loads of books as well. But the first panel, got no books in the background. What it means is the people on panels 2 and 3 are currently trying to move their laptop away from the bookcases, because I'm going to out them. But I mentioned earlier, you raised £3 million. Have you had to go outside of Liverpool to raise that money? What was your experience of investment raising?
Yeah, so we treat fundraising as a constant activity in the business. We don't look at discrete, we don't sort of stop and start. We're always fundraising. We've got investors so our first round of investment was primarily former colleagues from the investment management world, but they were former colleagues from the Northwest, London, Europe, the US, all across the globe, really. We've attracted VC family office money from Europe, and we've even done crowdfunding. So we've cast the net as wide as we possibly could, really. And each one of those avenues of funding has the pros and cons. But as Daniel was saying, you're going to look internationally for customers, and you're going to look far afield as you need to for customers. So why should that be any different? If you need funders that buy into your specific sector or your specific vision or your specific company, then what are the chances that they happen to be on your doorstep? You need to look at specialists in your sector, as specialists in terms of your stage of company, and specialists in terms of the vision that you share. And ultimately, you have to be prepared to hear the word no a lot, and you have to be prepared to go and speak to a lot of people. But that's the only way that you raise money. Just especially in the early stages, the idea is the easy bit. You've got to actually do something, and you've got to actually convince people that you're as bought in as they should be when they pass over their hard-earned cash to you. So we cast our net as wide as we possibly could, and the result is that we've been fortunate enough to get some decent funding.
Matt, we had a question that's come in actually from somebody called the anonymous attendee. AA will call him or her. They're obviously too embarrassed to reveal their name, Matt. But hi, Matt. Early on, when starting off, how did you find building the technology for the platform? Did you go outside Ticker for help, or build internally yourself?
I'll only answer if they share the name.
Yeah.
We initially used an agency in Liverpool actually to build the first sort of prototype version of the app. We've since rebuilt and brought everything in-house. So we have a team of 11 or 12 engineers full-time now, and they're spread across Liverpool and London offices, and a few remote since lockdown as well. So yeah, we now build all of our tech in-house, but we previously have outsourced.
And a lot of people say that when it comes to raising money, you've got to start that process early. If you were raising money, if you wanted money today, when do you think you would have started the process in your experience, Matt?
Well, it's a very timely question, actually, Chris, but I'm not going to say any more about that. But
let's be hypothetically. So if the anonymous attendee wanted to raise money, when would the anonymous attendee start the process?
They might have to share their name with people if they wanted them to actually write a check. But the so the current funding round that we started at the start of this year, and was actually interrupted by COVID for a period of 3 or 4 months. But I would say that there's a slight difficulty in the sense that you obviously want to make as much progress as you possibly can to justify the highest valuation and best terms for a fundraise, but also these things just take a long time. You know, there's the speaking to investors. Each investor has their own process, which can be a matter of weeks or months to get you through. There's then a legal process to go through. You know, we have 25, 30 shareholders on our cap table who all need to be consulted and signed and all the rest of it. So, you know, these things take months, not weeks. And my view is start the conversations as early as possible, even if it's a case of here's what we're thinking of doing, i.e. we're thinking of raising money in about 6 months' time. Is that the right sort of, what would we have to look like for you to be interested? I think those type of conversations should start as early as possible, really.
Okay, final question to you before I come to Clemens, and it's topical. We're going to hear from Hannah Forbes later about the whole issue of crowdfunding. You think crowdfunding will grow in 2021? What makes you say that?
Well, I think crowdfunding's had an extremely good COVID, if that's not too much of a controversial phrase to say. But you know what's happened is a lot of people have been sat at home. The VC market went on to the most severe of lockdowns that anyone's been on. They just completely withdrew from the market in March and didn't come back, a lot of them, and still haven't come back, some of them. And what's happened is, you know, direct to consumer businesses, and I can speak more knowledgeably about fintech than anything else, but they've had an absolute field day on crowdfunding. I mean, they use their consumer base, their user base. They build brand loyalty by allowing their investors to get a piece of the action. And you know, I think 2020 has been the year where crowdfunding platforms have matured, and it's actually become a very, very credible place to raise credible amounts of money. And there's been multiple examples of that this year. And also the big news in crowdfunding is that, you know, subject to regulatory approval, Seedrs and Crowdcube, the two biggest platforms in the UK, are set to merge next year. I mean, that gives companies access to probably way over 1 million registered investors between those two platforms. So, you know, if you have a good product and you have some money to take to the platform with you and some initial backers, I think it's a great way to get some money.
That's something that merge is something we were talking to Hannah about, actually. 2 quick questions, actually. Keep your answers nice and short, if you would. The first one is from Liverpool City Region's best dressed man, Gavin Sharrett of Mashbo. What things have put you off an investor?
I think so. We've only ever walked.
Funny story, Matt. Tell us a funny story.
Straight away. I don't remember the exact details, but I know I have walked out of one investigating. But I can't actually remember why now, but it was a long time ago. But you know, I think there has to be some level of personal rapport and relationship there, and there also has to be, you know, an investor is giving you the money, but they're not coming in to be your boss and run the business for you. They might want a board seat, but they're not joining the executive team on a normal basis. So, you know, they have to have faith in you and not just sort of, and there has to be that sort of belief that you can set up and establish a long-term business relationship with people. So, you know, I think if you don't get that sense, then, you know, that's probably a big question mark in my view.
And the final question, Phil McGuinness says, "Hi Matt. It's obviously the anonymous attendee has inspired everyone to give their names. Phil McGuinness says, "Hi Matt. In terms of the specific funding you wanted to raise, how was this calculated?"
In terms of the amount that we wanted to raise, so there's a couple of things that we factored in. Is we look at our forecasts and we look at what we think we can achieve within a period of time and how much that is going to cost. Build in a bit of buffer and sort of back that out and say, right, it would be great if we could raise this much. But the other thing you have to think about, or we think about in terms of funding rounds, is we are set to, it may be different for different businesses, but we've committed that we will have to do multiple fundraisers throughout our life. And therefore you have to think about what is a realistic valuation you can achieve, and how much dilution do you want, i.e. how much of the company can you sell for that investment at that time. So, you know, if you sell 50% of your company on day one, if there's 2 or 3 co-founders, by the time you've done 3 or 4 rounds of funding, you probably don't own much of the company anymore. So, you know, there's always that balance, but, you know, money in the bank is a highly valuable thing to have, as 2020 has taught everybody. So I would always err on the side of raising the money if you can, but obviously at the best terms.
I've seen that. I spoke to a tech business, and they literally only had about 10% equity left because they'd done so many raises and given so much equity away, and they lost their love of the business because they didn't own any of it anymore, or a substantial amount.
Yeah.
Thanks very much, Matt. Brilliant. I'm going to come to Clemens. Clemens, can I just compliment you on that? Your headwear, absolutely fantastic.
I'm too cheap to put the heating on, so I'm keeping my head warm. Sorry.
No, absolutely. Clemens, you seem to have been around for ages, you know, in terms of the Liverpool tech scene. I was doing my research. So before we even talk about VTime, you've been involved in the games industry since 1993. You moved to Liverpool in 1997. You've not turned your heating on once. Would it be fair to say that Liverpool's become more entrepreneurial, more diverse in your time, or not?
Well, yeah. So I think if you compare and contrast the 90s, you know, we used the games industry as a yardstick. It was only about a fifth of the size of what it is today. It's worth about 120 billion worldwide right now. It was only about 25 billion in the 90s. So, you know, a fraction of what it is today. And Liverpool as a city back then was already a global player, if you like, but it was pretty much dominated by one company, Psygnosis, which was bought by Sony 3 years earlier, 93. And Psygnosis was a global publisher and had a real sort of built almost an ecosystem centered around its activity. It had a site down by the South Harrington building, a lot of high value jobs there already. But any other companies that were in that space were almost like suppliers to that. We're either sort of doing products under contract and publishing it through Psygnosis. But, you know, it was pretty much sort of one-man show. But what you saw as a result of that sort of success, and then PlayStation coming on the market and it's starting to really grow quite rapidly as an industry, is that some of those sort of smaller companies became bigger standalone studios in their own right. So you had Bizarre Creations, they were eventually bought by Activision. You have Traveler's Tales down in Knutsford, they were bought by Warner Brothers. They make all the Lego games. And a bit further afield, Psygnosis had a relationship with DMA Design that did the Lemmings game. They went on to become Rockstar North, and of course they make Grand Theft Auto and Red Dead Redemption, you know, 2 of the biggest franchises in the whole industry. But in the early 2000s, you really saw that change massively because online and digital became, you know, the way to do business. And a lot of these sort of big studios that existed in the city almost collapsed over, you know, a fairly short period of time. And traditionally what you would have seen is people then maybe move to Canada or move to California or move to Australia in order to continue their career. But I think the sector had grown up to a point at that moment that, you know, people were, you know, had kids that were in schools, they had a sort of settled life, you know, they'd grown up as individuals. And so in the sort of 2010s, what you saw was a real influx of new companies starting up. And I think that was sort of alongside some of the sort of companies that were already there, creating a real sort of wave of new entrepreneurial spirit. It wasn't all games. You know, you had digital agencies like Opposing or Milky Tea doing self-publishing, and of course attracting investment, and really sort of creating something that today is I think a really vibrant scene that is a lot more diverse in terms of its offering, is a lot more of a global outlook across the board, not just from one company. And so, yeah, I would say it's definitely more entrepreneurial. It's more diverse and more innovative. Yeah.
I mean, well, one thing I was going to mention, you probably mentioned every single name in Liverpool there. You know, you've got such an encyclopedic knowledge of the Liverpool City Region's tech sector. If we fast forward to 2013, you launched VTime. You launched it with the backing of your founder, Martin Kenwright. Yeah, when you launched VTime, what were you setting out to achieve?
So we actually had a whole range of different IPs that we started at the same time, and we always thought, you know, Martin's backing allowed us to take a really different approach, I guess, and try various things. But we always knew that the one IP or the one idea that really took hold would be the one that we would focus on full time, and that ended up being V-Time. And V-Time is all about really transforming how people can communicate with each other and with the world around them using our enabling technologies and immersive technologies. And you know, we use those initially in our own consumer products, but we also use them with partnerships and with customers to help them better connect and engage with their audiences or their customers or their fans. So you know, that's really what we're all about.
Okay, once again, if you do want to submit a question, you can through the chat facility or the Q&A, which is the option that a couple of people have chosen already. 2018, Deepbridge came on board and you know, led a £5.4 million Series A funding round for V-Time. I know you spent time in California. Just explain your investment journey, Clemens.
Yeah, so obviously having Martin as an independently wealthy founder meant, you know, we didn't have to worry about investment in the early stages. It gave us the freedom to build the business, to bring the team together, to build the technology, to get product into the market. But we always knew at some point, you know, Martin needed somebody who could stand with him shoulder to shoulder. And you know, we just thought, you know, California, Silicon Valley, that's where you go for this sort of stuff. And you know, we had some exploring across Europe and sort of a bit further afield. But what we found in California was, you know, even though there was a lot of interest, we almost weren't raising enough money. So you know, a lot of average check sizes were looking to place investments of 15 to 20 million, and we were just too early in our journey to really contemplate that sort of money. And you know, when we eventually were introduced to Deepbridge, and you know, obviously with Deepbridge also MSAF came on board, we were just delighted that we found somebody almost down the road. Deepbridge have a headquarters in Chester, and it meant that it really put us on a sort of better and more sustainable outcome, I guess, for us in the long term. And I guess it would also help ensure that the business was, you know, really maintaining its roots in the region, which was important to us.
I mean, I just got a message on the chat from Max Sado saying, not every name, I think it's a reference to, he said, you know, I said to you, named a lot of companies. As Clemens said, there are quite a few companies out there. And Max, sorry that I ignored you, but I've name checked you now. You're oversubscribed for your initial raise, and you're in the middle of raising Series B at the moment. Have you found raising Series B different to Series A?
Yeah, quite different. So I think really the disruption that we saw in the fundraising, it all went virtual. So it all went onto Zoom. For a software company, especially one using immersive technologies, that's a big challenge, because a big part of any investor meeting is always a demonstration and being able to show firsthand the difference that these technologies can have. So we had to improvise, and you know, we had to sort of, if you like, learn the ropes new in terms of what works and what doesn't work in this sort of format over Zoom. But we're still continuing to see very strong interest. Yes, you know, I think it was said before, March, April, everything, you know, everybody's in the investment world really focused inwards and looked at their portfolio companies and wasn't really looking at, you know, bringing anybody new in. But you know, certainly this quarter we've seen that you know, almost return back to pre-COVID levels, and you know, we think we'll be able to close our Series B probably by the summer next year. So we're quite confident in that.
Phil McGuinness asks, hi, in going to the Valley, what process did you take to get the relevant face time to pitch? So what was your approach in Silicon Valley, Clemens?
Yeah, networking. Having a network of people already in Silicon Valley was helpful. We did it all ourselves, so we did not go down the route of working with an advisor, although we did have some people who were kind enough to open their black book for us. It really, what really helped us was having product in the market and catching everybody's attention. Back in 2015, December 15, we put our first product out, which was V-Time XR, and that was out on the Gear VR. And we even beat Facebook to the punch in terms of them getting their own kind of similar product into the market. And so that certainly put us on the radar. And again, it was one of the benefits of having Martin there to enable us to do that. So, but yeah, a lot of legwork, a lot of cold calling, and just trying to get introduced to people. And I think there was a question before, you know, what puts you off an investor? Well, one thing we learned during that time is, you know, if the investor doesn't believe in the market, you're wasting your time. You know, you're never going to convince an investor that the market that you're in is the right market for them to invest in if they haven't done their own homework. And so that's certainly something that we learned during all the meetings that we had in Silicon Valley is, you know, there was a lot of people just interested in what we were doing, but ultimately they weren't really convinced that the market was something that was right for them. And so in that respect, you can waste your time quite quickly.
You've answered pretty much all the questions already in your early answers, but I'm going to ask you two very, very quick ones. The first one is, would you ever go on Dragon's Den?
No, I didn't get close with VTime. We got close with the previous business. The problem with all those programs is they make in TV, so you always have to bend and everything around, you know, what looks best on TV rather than what looks best for your business. So I think that's always worth keeping in mind if you do ever get invited.
And what do you think will happen in 2021? How confident are you?
I feel really confident about 21. I mean, we're one of the businesses that, you know, produces effectively software that allows people to communicate using the internet. Clearly, this year has for us been a real validation of what it is that we're doing. Immersive technologies have really come to the fore as a real differentiator, especially when it comes to, you know, battling Zoom fatigue and all the sort of other new words that are entering our vocabulary. So I'm feeling really confident about 2021. I think the start of it's going to be a bit bumpy still. But you know, by the summer, hopefully, we'll start getting, you know, a bit more on a balanced footing, and you know, we can do great things as we get the second half of the year.
Clemens, thanks very much to you, and also thanks very much to
Pleasure.
to Raina, to Matt, and to Daniel for our first